dressing into the end of the month, say using a December 29 expiration, and setting up the first batch of earnings as we go into early 2024 really are the same watch lists. So one of the things that we just wrapped up doing in the Sector Secrets Mastery this afternoon is our weekly macro session. But right now, look, the macro is pretty much set, gang. The macro idea is we want to focus on the fact that the Federal Reserve is setting up, unless they change their mind and start changing the messaging, as of right now, they've seen fit to let us, as a trading and investing public, believe that they're going to cut rates in March or May. One of those two, we're getting a quarter-point rate cut, maybe both. All right, so that's what's in the Fed Fund Futures data. That's what the target rate probabilities continue to reflect. Tough to be a bear in December, in an uptrend in the broader averages. NASDAQ's in an uptrend, S&P's in an uptrend, and the Dow is as well. So again, I don't want to be a bear because, as we've talked about a lot in these videos, strength gets stronger. So what I want to talk about is the fact that the window dressing setups and the earnings setups are pretty much the same. So I'm sharing with you here notes right from the mastery session, because this is really important to me. I want to set up everyone with some ideas and an opportunity to take advantage of the strength. All right. Same thing that we've been doing all year long. We have not been bears. I will not be a bear. It's just cost a lot of people a lot of money by listening to people that are saying that the markets are circling the drain. We're at new highs, gang, in the NASDAQ. This is the opposite of that. And yes, we will probably pull back. In fact, I'm rooting for it. But please separate the notion that a pullback is some sort of crash and that it has to be a big pullback. Let's ask ourselves where the possible pullbacks can be, how that would lend itself to window dressing, and how that would lend itself to possibly earnings play. So that's index sector stock. Let's start with the NASDAQ. So first of all, I want to pull back to the daily price movement range, and that would take me down to about 16,008 to 16,007. Is that something we could see in terms of a pullback? Yeah, gang, that's absolutely a pretty reasonable thing. Right now we're at 17,000, right? And you could see the average range on a lot of these candles have been anywhere from 150 to 200 points. So if we were to move 200 points south from the current high, that would land us at 16,800, right? So to be within about 150 to 200 points of a pullback buy is not out of the question with the kind of ranges that we've seen so far. So please don't think that 16.8 is a bridge too far. It's not. It would just need to be a bearish pullback day. All right, let's go to the next step. Tech earnings don't really start to ramp up until we get Apple, Intel, Starbucks, because that would be XLK, SMH, and XLY. All right, and then it ramps up again at the end of January with names like Meta, Microsoft, and Qualcomm. Yes? Okay. So we think about those two time horizons. Now I want to take a look at all those stocks, because NASDAQ to Apple, I want to see Apple in an uptrend. I want to see the XLK in an uptrend. That's index sector stock, right? If I'm looking at Intel, once again, I need to see NASDAQ in an uptrend. Is the SMH, semiconductor ETF, in an uptrend? It certainly is. It's one of the strongest sectors in all of the major sectors right now. In fact, it's the leading sector in terms of strength, outperforming even the XLK. And yes, as long as Intel is in an uptrend, there you go, right? And so this is not just window dressing, not just strength getting stronger, but we're adding an extra filter now of earnings, right? Proximity to earnings, setting up our 642 earnings window. But again, window dressing and earnings are starting to overlap here. Let's take a look at another group of stocks. Let's say we were looking at the S&P, right? Is the S&P moving higher? Is it moving in an uptrend? It is, right? 4,800 crossed today in the March ES futures contract. All right, well, the number 2 weighted sector in the S&P is financials. Is our financials in an uptrend? Absolutely. Now let's take a look at what is largely considered the very beginning of earnings season, and that is the flurry of financial stocks that come out. We'll take a look. I've got Bank of America coming out. Is it in an uptrend? Boom. Not only is it a window dressing candidate for December 29 expiration, It's also an earnings candidate, right? As we go into the earnings for Bank of America. What about Citi? Uptrend? Yes. Part of XLF? Yes. XLF. So we have index sector stock, S&P financials, and Citi. Yes. You go to JP Morgan. This is the number 2 weighted stock in XLF. This is a stock that we just finished. Unfortunately, the option expired last Friday, but this was a stock that we've been playing on daily price movement range pullbacks with the anticipation of what? With the anticipation of the trend continuing, index sector stock. Some of our traders bought the expiration from last Friday, right? We had our triple witching on the 15th. Other traders said, you know what? I'm going to buy the December 29 and I'm going to take advantage of the window dressing rally, and I'm going to use an expiration that allows me to take advantage of that countdown, right? Getting to third Friday of the month, that's one time horizon or one countdown. You get to December 29, that allows us to take advantage of the Santa rally from 22 to 29 December. That's another expiration. And yet other traders are saying, wait a minute, Rag, we have earnings coming up in JP Morgan. And if I have earnings coming up in JP Morgan, then what's that window there? So if I'm looking at JP Morgan earnings, the next thing I want to remember is, all right, how do I get down to that time? And for those of you that don't have a good earnings calendar, I've been using this one for years. It's my favorite. It's free. It's the best one I've ever found because unlike other calendars that have cutesy little logos and tell you what's coming up this week, I can track things well in advance. And this is Estimized. Big fan, free service. Take a look at JP Morgan, the 12th. So with the 12th expiration, I have a couple choices with JP Morgan, right? I can either use the 29th and take advantage of the Santa rally / window dressing. I can go to the 12th itself and just make sure I get out by the 11th because JP Morgan earnings are coming out before the open, right? So they're before the market opens. So then I want to be out by the 11th, but that would give me a little bit more ability to ride the trend out with the January 12. Now, some of you saying, Rag, JP Morgan, S&P, financials are on a tear. What if it keeps going after earnings? That would make a January 19 expiration make sense, but the setup is still the same. Buy the dip in the daily price movement range, choose the expiration that gives you the window, and make sure you're looking at the 642 earnings window. I don't want to be in anything any closer than Jan 2. I'm gonna take a look at earnings that come out after Jan 2, but by Jan 16 to Jan 30, right? That's the window. And so once you got the window down, it yields the high concentration weighted stocks in the indices and in the sectors. And then we start to run some filters. Gang, this is exactly what I do for earnings. This is exactly what I'm teaching folks in the mastery. So if this kind of stuff is appealing and you're thinking, yeah, Rag, I love trading the S&P, and it makes sense because you've been telling us the S&P is going to move higher as soon as XLK and XLF are moving up. That's exactly what happened, right? So now I'm going to take that to another degree saying, well, if I know that the S&P and financials and certain stocks are moving higher, we can window dress, rally, or we can start to play these things into earnings. So I'm giving you all the details here in the notes. And that's what we're going to continue to do, gang. This is what we want to keep in mind. We've been really bullish all year. This last quarter, we said, hey, look, strength gets stronger. And that's exactly what's been happening. Please don't buy into bearish narratives. Yes, we might pull back, but those are going to be buying opportunities. Now, come January, we will see what kind of mood we're in as we get a little bit of window undressing, probably hitting semiconductors and XLK tech the most. But remember, if we're talking about a dovish Fed as soon as March, who in their right mind is going to say it's time to dump stocks when the Federal Reserve is cutting rates? So very interesting intersection of the window dressing rally into the unwindowed, right? The window undressing, basically getting rid of those names that were bought at or near their highs. And then now we start to ask ourselves, what implications are there for a policy shift to a more accommodative monetary policy, dovish from Jerome Powell and company. That's where we sit, gang. So that is the roundup of what we're doing, why we're doing it, and the timeline for it. These setups will be taken mostly on a daily time frame, by the way. I'll see you all in the next update.